Good morning, it's 4 am on Friday, April 10th, and the Nifty is entering a weekly close that feels like high stakes tug of war. Yesterday, the 5-day winning streak snapped as we hit the 24,000 brick wall. But overnight, the script changed. TCS has delivered a massive 12% profit jump, proving that Indian IT is war-proof. The question for the opening bell is simple. Is the TCS earning cushion enough to stop the bleeding from $97 per barrel oil and the new shipping blockade in this? So let's talk about the domestic setup because the script has changed overnight. First, the elephant in the room, the TCS results. Late yesterday, India's largest IT firm reported a massive 12% jump in net profits, beating all street estimates despite the war-driven macro headwinds. TCS reported record deal wins of $12 billion for the quarter. This is the earnings cushion the market desperately needed. Expect the IT sector to decouple from war news today and provide a massive floor for the Nifty. Technically, the India playbook is now very defined. For the Nifty, the immediate support has slipped from 23,630 to 23,600. Not a big jump. If we break 23,600, we are looking at a deep correction towards 23,200. On the upside, the resistance is the hard ceiling at 23,880 to 23,900. We need a sustained move above 23,900 to reignite the rally towards 24,000. For the Bank Nifty, look for support at 54,400 and resistance at 55,350. Now let's talk Trump. Turning to the global desk, the 2-week ceasefire is currently on a knife's edge, while direct face-to-face negotiations between the US are set to begin in Islamabad today. The backdrop is grim. Israeli airstrikes in Lebanon have killed over 300 people, prompting Tehran to declare a new restrictive phase for the Strait of Hormuz. Iran is effectively claiming that ceasefire is only valid if the strikes in Lebanon stop. This no permit, no passage directive has caused Brent crude to bounce back towards $97, creating a fresh headache for our local fuel and paint stocks. Let's talk about the 3 top stocks. So are the stocks from yesterday still valid? Yes, but with a major tactical shift. While L&T and EPC giants like KEC International remain the structural Gulf recovery plays, they are now joined by IT sector. TCS has changed the game. By proving that digital transformation spend is war-proof, TCS at 4,100 rupees is likely to pull Infosys and HCL Tech along with it. If you were playing the new war steady trade, you are now pivoting into a value plus earnings trade. Meanwhile, L&T at 3,723 remains your primary geopolitical barometer. If the Islamabad talks show progress today, L&T will be the first to cross its 200-day EMA. We also need to keep a close eye on Adani Ports. The stock is currently the most sensitive to the Strait of Hormuz permit friction. If the news of Islamabad suggests a breakthrough on shipping corridors, Adani Ports, which hit a low of 1313 yesterday, could see a massive V-shaped recovery as the prospect of normalized trade from Haifa becomes tangible once again. Let's look at the market dynamics. India VIX is sitting at 20.4, indicating that panic has been replaced by extreme uncertainty. Yesterday, FIIs were net sellers of 2,800 crores, but they were once again overwhelmed by DIIs at 4,100 crores buying. So today's session is about the weekly close. If the Nifty can reclaim and hold 23,850, it tells us that the bulls are willing to hold through the news-heavy weekend. If we slip below 23,600, the ceasefire rally may be over. Watch the TCS follow through, watch S&P resilience, and stay glued to the headlines from Islamabad. So thank you for tuning in so early in the morning. I will see you at the opening bell live at 9:15. Good luck and have a great day.